Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the morning swing trading show. Today we're Wednesday, April 8, 2015. We're going to take off the free trial here on the right and tell you that the question bar is open, folks. If ever you have any questions, feel free to ask them. Today the markets are volatile. If you take a look at the situation here, our opening went up, went down, finally we're getting back up. And I think this volatility that we see on the markets, though, is simply due to the FOMC minutes that will be released at 2 o'clock. Don't forget that following the disappointing employment report that we had last Friday, a lot of investors were saying to themselves that we're going to have possibly a delay before the Fed increase its interest rate. Well, with the FOMC minutes, investors are expecting to have more clarification concerning the interest rate hike. But the minutes are only some summary of the last meeting. So are we going to have clarification there? We don't believe so. We believe that definitely the Fed it's going to be the same thing, and investors are kind of expecting something, but I'm not sure there's going to be more clarification on those FOMC minutes that will be released at 2 o'clock. In terms of the sectors, today the sector where we have the biggest correction, it's the energy sector. A lot of profit-taking opportunity have been being done there. This is why yesterday on MarketGurus.tv, what we have recommended is to take some profit of your long positions in the energy sector. I've also mentioned that in the show. For instance, HEU, which is the bullish ETF that tracks the energy sector in the TSX, we recommended to take some profit when the ETF reach that resistance at 426. So this was important to do so. Right now the sector just got back into a neutral cycle. We also published an article on our Facebook page saying why the rally in the energy sector, according to Raymond James, which is appropriate firms, why they say you should remain cautious on the oil's rally. I invite you to go to our Facebook page and take a look at this article to read it and to see their explanation. Concerning gold, gold is also showing some weakness today. Those of you who bought GHGD yesterday, okay. Right now the correction could continue at least until 115 on gold. The thing is, we're reaching right now a lot of congestion with all the moving average. The 10, the 50, the 30-day moving average are all there. on gold. So it's normal that gold right now it's staying flat. However, you should monitor it. If ever we have a new low intraday on GLD on the New York, definitely those of you who bought bearish ETF today will be in a nice position on gold. The target for gold, well, by looking at the stochastics, we could even go further down, but there's still that trend there that has not been reversing. There's still a lot of congestion there around 115. This is why we have a pause in gold. But the sector could start a bearish cycle. There will not be a lot of breakdowns though, because mostly stocks are neutral and going down within the sideways formation. I think that we will have only breakdown if ever we could have a stabilization phase here on the gold sector and then a new bearish cycle. So far it's not the case. A lot of stocks are either having a correction, such as Kirkland Lake Gold. If you bought Kirkland Lake Gold here on the breakout, well, you should continue to hold on to it because it still remains above 535. Premier Gold Mines, well, if you bought it here on April 1st, you're definitely at risk. If the stock goes below 242, you have to close it. And Barrick Gold, well, so far it maintains its upward trend, but it just has a correction. And Guyana Goldfield, same thing. So it's an addition of correction everywhere on the gold sector that's bringing the sector further down. Concerning the energy sector, if we make a follow-up on this, though, we have the energy sector that so far with the oil correction, and why oil is going down today is because Saudi Arabia, they say that they will maintain their current production, and they say that they will be able to navigate through the decline of oil prices without having to cut their production. So what that means basically is that they're not going to cut production to actually make oil prices surge. They believe that with the current low oil prices, sufficient companies have already reduced their production, and that with this trend, that will be able to propel oil prices higher. This is their intention. Right now, oil has a slight correction, and the energy sector just got back into a neutral cycle. So it was a clear profit-taking opportunity yesterday in the energy sector. If you have not done so, you can still wait for those stocks to reverse their upward trend, but you're definitely not in a great situation if you have not done so yesterday, taking some profit on energy stocks. Now, concerning the news, the major news today coming from the England Stock Exchange, the FTSE Stock Exchange, is that Shell has acquired BG Group for $70 billion. That's one of the biggest transaction ever made. Retail sales in the Eurozone are slightly going down, and the Bank of Japan kept its monetary policies intact. In terms of our Canadian side, though, we had one big news here on this company, Manulife Financial. They made a deal. They paid DBS Group Holding $1.2 billion to be able to have access to their branch and sell insurance product. So this has created some slight bullish movement among the financials, especially among insurance stocks. So Manulife took the lead. But Manulife, look, there's still a lot of resistance there. You could build up your long positions on Manulife because by getting access to the Asian market, of course, it's a major opportunity to make a lot of money for Manulife. CI Financial could break out higher than 35.50. Power Corp could break out also as well, higher than 33.87. Great West is not reacting that much, but could react. Power Financial higher than 37.70. That stock could break out. Actually, on MarketGurus.tv, that stock has been recommended on the list of stocks that could actually start a breakout. So this is actually where we had a movement on the Canadian side. Also, the consumer staple sector has been strong with a lot of stocks that are pursuing the rally, such as Metro, George Weston, Loblaw. On MarketGurus.tv, we recommended a clear entry point on April 2nd. We were reluctant on MarketGurus.tv to recommend additional stocks on the consumer staple sector because in our analyst choice portfolio, we already have enough exposure on the consumer staple sector. But those of you who didn't have exposure on April 2nd in the consumer staple sector, that was the right timing to do so. Right now, we just have a pursuit of the rally, so it's not a moment to get in, but rather for those of you who bought on April 2nd to continue to hold on their positions or even take some profit if you want on some of your positions on the consumer staple stocks, because that's a sector that's actually really strong. Concerning the markets, they're all neutral. As I said, as long as we do not have clear indication what the Fed is going to do with interest rate, I think we will remain markets will remain volatile. So the Nasdaq remains neutral. Same thing on the Dow Jones and the TSX. After reaching its top, it's now stabilizing, and the correction of the energy and of the gold sector are the responsible of the TSX slight correction. But this should not be a moment where you should short the market, because right now we're just beginning a stabilization phase on all indices. Now let's take a look at the questions we had from yesterday from Ben about NPH. Is this stock a good entry point today? No, Ben, it's not a good entry point today. It's a stock that maintains a downward trend. It's a stock that, yes, is oversold. I agree. However, it still remains within that downward corridor. So why would you risk getting into a stock like that? I think if we could have a stabilization phase around 33 cents 52, right, and 44 cents, stay there, and then have a clear break of 45 cents 42, okay, I might consider that stock as a buy. But right now, it's only a stock that is pursuing its bearish cycle. It's not a buy because there's a probability that we might reach the 100-day moving average around 30 cents on NPH. Judging by only the stochastics is not enough, because the stock remains within a downward trend, and here the trend has to be your friend, but here the trend is becoming your enemy in terms of buying, because the stock is maintaining its downward trend. Now here, when questions on HGD, what should I do with HGD? You bought at 12.23. Maybe you mean 11.23, because 12.23 the stock has not, the ETF has not reached that. If you bought at 11.23, okay, 1070 is the exit point on HGD. As a target for HGD to take some profit, it's $12, right? When the ETF reaches that downward trend. The thing is, with the gold, as I said, there's a lot of congestion there at 115. So if ever we have a new low intraday on gold, which we're having right now, definitely your positions could pay off. So right now, I would say hold on to it, put your stop loss at 1070, and hope that gold could actually maintain this decrease intraday wise. So far, there's a lot of congestions, but we could actually have a correction that could bring gold until at least 113 if we're able to go below 115.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. Now there's a questions here. Bob has a questions among energy stocks. Is it a hold on energy stocks you bought a few days ago, or is the sector heading lower? Thanks. Well, Bob, the question you need to ask yourself is, the question I need to ask you is, are you taking some profit? A few days ago, great timing to get in. Props. But are you taking some profit? If you have already taken some profits, hold on to your current positions. That's what we have done on MarketGurus.tv. That's what we continue to recommend. But right now, if you have already bought some positions on energy stocks and have not taken some profit, well, I think it's wise to slightly reduce your exposure, not close all your long positions, but slightly reduce them, because there's a risk that the energy sector might reverse its upward trend. It's neutral right now, but nothing says that the rally could continue. As I said, I also invite you to take a look at the article we published on Facebook talking of the energy sector, and this will give you more insight about why Raymond James thinks that the energy sector rally you should remain cautious in that. And this is why I think reducing your long exposure could be also a great alternative if you have not taken some profit. Now, here you bought RRX. So you bought RRX at 887. Should I sell it? Well, you had a great entry point, 887, right? Clear break of that resistance. Good job there. Now, should you sell RRX? I think what you could do is you can reduce your long position, which means that you can slightly take a first round of profit on a stock like that, not close it totally because the trend is your friend. And look at this, by putting a trend there, connecting all those bottoms, the stock remains within its upward trend. So there's no reason to close that positions. Yes, you can take some profit on that stock, but do not close it totally. And I think that right now, since if ever the stock, let's say, goes below 884, reaches the price you paid, well, you might close totally the positions on RRX. But definitely, I think reducing your long exposure on that stock is appropriate by taking slightly some profit on RRX. But so far, hold on to your remaining position because that trend is still maintained. And if ever it reaches the price you paid, around 887, I might close it totally and buy it back whenever I see the stock retesting that former long upward trend and start to get back up. So that is the strategy I would favor on a stock like that. Now, is it too late to short oil? It's not too late to short oil, but why would you short oil right now? First, oil, I'm talking of USO, remains within this short-term upward corridor. Indeed, it is having a correction. But why would you short oil if it remains within an upward corridor? It's not appropriate. The thing is, you should only short oil whenever we're getting out of this short-term upward corridor, meaning if USO can go below 1775, 1750, then we will get out of this upward corridor. Then you might consider some positions such as HOD on oil. But right now we are in a situation where we could have that. We do not have it right now. We overbought, yes, but that's not enough. We could be overbought and remain there above 750 on oil and make a new sideways formation. So this is why I think it's too premature to try to short oil right now as long as oil remains within its upward corridor. If it goes below 1750, we have a clear bearish cycle on the energy sector, a lot of bearish momentum among energy stocks. I think you'll have the necessary momentum to open up positions on HOD, which is a bearish ETF that allows you to track the bearish cycle of oil. So far, it's only a correction. You bought SEV at 74 cents. Okay, good job. You bought SEV at 74 cents. Good job. You hold on to it. There's no panic. All right. Hold on to it. But if ever you make a 5% on that stock, take some profit. I see 82 cents as a potential target for a stock like that. 82 cents as a potential target. So at 82 cents, make sure, Steve, that you take some profit on SEV. And I want to analyze here IT. Entertainment Group, it's a clear breakout, really. Clear breakout. Except it's far. It's really far. So that would not be a stock that we would recommend among our analyst shares portfolio on marketgurus.tv, but it's a clear breakout. I have nothing to say against that. As an exit point, I see it at 1627, below that support on Entertainment Group, but it's definitely a clear breakout. The thing is, what I mean by it's far is that look how much distance with the 200-day moving average. That's a lot. So this is the thing I don't like with Entertainment Group, but it's a buying signal. I have nothing to say against that. 1627 as my exit point. As for the day trade of the day, folks, there's been several ones. Those have been the most active. Molycorp, DSKY, WB on the NASDAQ, but we chose one on the TSX. It's MSL. If we look at this here, intraday wise, the stock gave one entry point here, another one there, and now it's stabilizing. The new entry point is going to be at 325 on a stock like Maris Labs. If we could have the stochastics that's starting to tilt towards the overbought situation. So that has been the best day trade of the day, and there have also been several ones. The strategy of the day is to continue to limit yourself to day trading In terms of the new buying opportunities or short selling opportunities, there are not a lot of them on the markets because markets are beginning, not beginning, or on American markets, they're continuing their neutral formation. And on the TSX, we're beginning a neutral formation after testing the peak. Energy stocks, though, if you have already taken some profits yesterday, good job. Hold on to your current positions. But if you have not done so, for instance, RRX, you bought at 887. I think it's wise to slightly reduce your exposure without closing the position totally. That's the strategy that we advise. And gold, if ever it continues its decline, well, those of you who bought HGD will be more than happy. We could see gold reaching at least 113, and HGD around 12 bucks. That will be a point where you're going to have to take some profit on your positions on HGD. So that said, see you tomorrow on the Swing Trading Show on DecisionPlus.com.